Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today and join more than 60,000 happy investors that save money on every precious metals purchase they make.
Hey everyone, this is Elijah Johnson with silverdoctors.com, and with us today, a new guest, Matt from the Silver Fortune YouTube channel. Matt, thank you so much for joining us today.
How's it going, Elijah? Thanks for having me on.
All right, well, we really appreciate you coming on today. Did you want to first, since we haven't had you on before, maybe give your view, your general view on the overall U.S. economy right now?
Yeah, look, I could come on this show and I could do what some of the others have done, and there's nothing wrong with what they say. The U.S. economy today is not in good shape. People, maybe in the mainstream media, if you go on CNBC or Bloomberg or somewhere along those lines, they'll tell you what the unemployment number is. They'll tell you that GDP is strong for the last 2 quarters. Of course, those are official government numbers. They'll tell you that we've had one of the longest recoveries in U.S. history. But what they won't tell you is that this is one of the weakest recoveries in U.S. history. They won't tell you that this recovery has been pushed along with the help of historically low interest rates. Interest rates today, what are they at right now? The Fed funds rate is at a little bit over 1%. Now, and that's high. For most of this recovery, it was at around 0%. Historically speaking, I'm not talking the last couple of decades, but the last couple thousand years, that's an anomaly. Interest rates have never been that low for this long. Okay, and over the short term, interest rates can help boost up the economy. It can stimulate lending. It can maybe cause some people to go into other investment strategies other than things like bonds or just plain old bank accounts. But they won't tell you these types of facts about the economy. They won't tell you that the GDP number today is using a totally different methodology than it was using 10 years ago or 20 years ago. Same goes for unemployment. Same goes for inflation. And so there's really a lot of, I hate the term personally, but there's a lot of fake news about the economy today. And you won't hear that from politicians oftentimes. You won't hear that from these mainstream media sources. But again, I could come on here like so many other guests or so many other people in this alternative financial media sphere and talk about how the economy is poised to collapse any day now, or the stock market is poised for a crash. And it certainly would look that way. When people say that, and I've said it countless times, that the stock market is overvalued, that bonds are in a 30-year bubble, we're not wrong in saying that. It's just that when we make a prediction that it's going to collapse in the next 6 months, that we're heading for a recession any day now, it's not so easy to make that prediction because, well, A, you have a lot of manipulation of statistics of government numbers, and I kind of covered that a little bit already. But B, you have a massive amount of liquidity of money moving into the system via things like quantitative easing. And of course, interest rates, again, they help stimulate the economy over the short term. And so when you have all of this influence, this intervention from central banks and from governments, it's not so easy to make that prediction. So again, I could say the stock market's going to collapse any day now. This rally could go on for another year, go on for another 5 years. I don't know for sure, but what I do know is that it can't go on. It can't go on indefinitely. I was reading an article. I talked about this in one of my past videos, actually. This article is from a week or two ago over on Zero Hedge. We all love Zero Hedge, and they had this great article over there. What will pop the everything bubble? And the everything bubble is kind of what everyone calls the stock market, bond, real estate bubble, et cetera. What can pop it? And this guy, this author, it's escaping my memory exactly who it was that wrote this, essentially said, look, this bubble can go on for a long time because central banks can always print more money. And so he asked the question, what can't be fixed by just printing another $1 trillion? And that's really how I feel about this, I think what he said, he came up with 3 different things that printing more money can't necessarily solve. He had fragmenting elites, and so these different factions of the elite, because they're not a united front. They have their own goals, individual goals. I mean, sure, Democrats, Republicans oftentimes might be cut from the same cloth in some ways, but even so, these different factions, even the deep state, they have their own goals, their own purposes, and so fragmenting, that definitely can pop this everything bubble, because for some it might be desirable to pop this bubble, right? If we have a Donald Trump in office, it might make sense for the Federal Reserve to stop printing money, to kind of, and other central banks as well, to stop this easy money policy, to maybe crash the economy on his watch. So that was one thing that he came up with. The other one was this wage gap. That's actually a video I'm publishing later today. This wage, or not a wage, but a wealth gap that we see in the economy today, and how historically, whether we're talking about the French Revolution, the Bolshevik Revolution in 1917, that's actually just around 100 years ago, this month or last month, or the rise of the Nazi Party, a lot of that was caused by economic distress, a lot of wealth disparity. There was very few individuals that owned a massive amount of wealth. I saw a headline recently talking about how the 3 richest men in the United States, that's Jeff Bezos, Warren Buffett, and Bill Gates, their combined net worth is today equal to the combined net worth of the bottom 50% of the U.S. population. And that type of, I mean, we could get into why that's the case. And again, a lot of it goes back to central bank policy, why the richer get richer and why the poor get poorer. But in the end, something's got to give there. People won't put up with this indefinitely. But the final thing, especially talking about economics, not just society as a whole, but the final thing that he said that can pop this everything bubble, that can bring this economy down, is inflation. And sure, I mean, the government can continue to lie about inflation and say that inflation is lower than what it actually is. What is it right now? It's under 2%, something like that. But I've seen plenty of statistics. If you've ever heard of, maybe you can put a link below in the description to this, a website called Shadow Stats. And what this guy over on Shadow Stats, I think his name is like John Williams or something like that. What he does is he takes the methodology that's used to calculate inflation back in 1990 or something like that. It's like 20 or 30 years ago. And he uses that methodology through today. He doesn't change it. I mean, that's what whoever calculates inflation, I think it's Bureau of Labor Statistics or something along those lines, whoever calculates inflation today, they change this methodology over time to make it seem lower. But in reality, inflation, I think, is running much, much higher than we actually realize and what governments or these official numbers actually say. And so ultimately, I think that's what has the potential to kill this everything bubble, to bring down this economy. Either A, inflation, because they can't run away from the rules of economics, the rules of money. If you increase the money supply over and over again, that eventually you're going to get significant inflation. Either A, you're going to have inflation, or you're going to have some group of individuals, possibly the Fed, or collusion between the Fed and other central banks, that bring down this economy on whoever's in office, on Donald Trump's head. They take the proverbial punch bowl away. So that's kind of how I feel about the economy right now. I don't get too big into predictions about when it's going to happen. I just know that it indefinitely will happen.
Now, you mentioned how one of the ways that the economy could collapse is if the elite see, Donald Trump as kind of an outsider and that they want to crash the economy on his watch. What is your perspective on his first year in office? About almost exactly 1 year ago, he was elected. Do you think he's drained the swamp and stirred things up enough so that the elite would want to do that, want to crash the economy on his watch?
Well, and this might be somewhat an unpopular opinion, because this alternative media tends to be dominated by conservatives and libertarians. But I'm not shy about on my channel talking about how I'm not a huge fan of Donald Trump. He is better than the alternative, and he has done some things that I approve of. I recently saw that he was looking at removing the individual mandate for health insurance. And maybe that part of the political motivation there is to kind of bring down Obamacare faster, which I have no problem with. But he has done good things in office. But as a whole, I don't necessarily see him as anti-establishment. His core supporters do, and I understand where they're coming from. I don't see it that way. But even so, within his own party, and certainly within the other side of the economic or the political spectrum, Donald Trump is pretty unpopular. Worldwide, he's fairly unpopular. I'm just stating facts here. I'm not trying to make this a huge anti-Trump rant or anything like that. He's not very popular, and that alone, I think, would be a good enough reason to bring it down on his watch. But do I think he's draining the swamp? No, I think we have to ask ourselves. So Elijah, if I asked you the question, who is the most important or the most powerful person in the United States? Who would you give as an answer?
So the most powerful person in America I'd probably have to say the Fed chairman, Janet Yellen.
Okay, yeah, that's where, most people would say the president, right? And you could argue that maybe the president is controlled by somebody more powerful. But yeah, in many ways, the Fed chairman is just as powerful, if not more powerful. And yet, if you ask 95% of the U.S. population, who is the Fed chairman, what does the Federal Reserve do? What do they do? They wouldn't be able to answer that question. But I think a good piece of proof that I would give to as to why I think Donald Trump is not draining the swamp is his recent appointment to replace Janet Yellen. Janet Yellen is just about as dovish as they come in terms of her monetary policy, meaning she's going to put out a very loose, easy money policy. And he ended up replacing her with a guy by the name of Jerome Powell. He served on that board of governors for, I think, 5 years now. And in that 5 years, he never voted against what the Fed eventually did in terms of their policy, whether it was the third round of quantitative easing, whether it was keeping interest rates low or slowly raising them. Jerome Powell always voted with the rest of the Fed. I fail to see 1 year on how this could continue to play out to be just one big chess game that Donald Trump was playing. I will concede that there are some very powerful elements within the U.S. government, the global government, that do influence his decisions significantly. They do put him in a bind, I'm sure, from time to time. But when you pick somebody like Jerome Powell for Fed chairman, I mean, you are the president. And I certainly think that he could have picked somebody that would have been much more favorable to our cause. Think about back to before he got elected, the things that he said about Janet Yellen, about how the Fed was blowing up a big bubble in the stock market, about how he basically said he wanted her out. And it looks like he will be getting rid of Janet Yellen, but he's replacing her with another Janet Yellen, in my opinion.
Right. And I know one of the things that Trump talked about before he was elected was auditing the Fed. And it doesn't seem like I haven't heard anything about him talking about that now that he's president.
Yeah, and you're totally correct on that. And Jerome Powell actually is on the record as being he's very much in opposition to the whole audit the Fed and the Fed push that was kind of started most notably by Ron Paul and later on by his son Rand Paul. So that's, again, I mean, this isn't some big chess game. I think it's just more of the same.
Definitely. Now, getting to another aspect of what you think another thing that could collapse the economy, you talked about inflation. Can you expand a little bit on that?
Yeah, I mean, I'm sure most of your viewers understand the basic elements of inflation. You have money supply, you have velocity of money, and that's essentially what drives inflation. Right now, the Fed is in a very slow, a very weak tightening cycle where they're slowly raising interest rates. They're slowly reducing their balance sheet. I think they just started in October. But as a whole, around the world, I think, we can talk about the dollar specifically in terms of inflation, in terms of a fiat collapse or whatever you want to call it. But it's something that I think is going to be a global event. The yen, the euro, the pound, the dollar, all of those currencies eventually will collapse. I mean, many would say that they already have. In the 104 years that the Fed has been around, the dollar's lost like 97% of its value. I think that type of inflation is only going to accelerate in the coming years around the world. This isn't a dollar-specific event. So the Fed is tightening their monetary policy, even if it's extremely slowly. But around the world, you still see plenty of quantitative easing programs going on. You still see plenty of central banks at a much lower interest rate. And that's a big part of why the stock market is so high as it is today. That's a big part of why the world economy hasn't totally fallen apart yet. But that's the end game. I do believe is inflation, a hyperinflationary event. When it comes to the Fed, I tend to believe that their future policy, their future decisions will largely be decided by what they've done in the past. And in the past, the Fed has always chosen the easiest decision over the short term. Whatever decision is the most popular over the short term, that's what they've chosen. And so if that means more money printing, that means lower interest rates, negative interest rates when we get some sort of a weaker economy or something, if there's some sort of black swan event around the world, that's what we're going to get. That's what they're going to give to us. They're not going to suddenly start tightening monetary policy. And so I couldn't tell you when this big inflation is going to happen. Like I said, right now, I think it's much higher than 2%. But I think when we think big inflation, we're thinking something on the scale of Zimbabwe or Venezuela. I couldn't tell you exactly when that's going to happen. But regardless, we still have ongoing inflation. We have for over 100 years now. And I think a big part of what I talk about on the channel is how you can protect yourself from that using things like precious metals.
Definitely. And did you want to expand on that, how people can protect themselves with precious metals and maybe other things?
Yeah, I mean, precious metals, you can talk about protecting against inflation, and that has always been true. I mean, for thousands of years, silver and gold have been used as money, as a way to preserve wealth. Silver maybe more so on the currency side of things, gold more so on the wealth, massive amounts of wealth preservation side of things. But in all honesty, these last 40, 30 years in which we haven't had a circulating silver or gold currency, we haven't had some sort of currency that's backed by silver or gold, that's an anomaly throughout world history. And I think eventually that will change. But in the meantime, you can expect all these other currencies to continue to inflate at an exponential rate, and you'd be best off protecting yourself with precious metals against that. You could also compare precious metals to other assets and how other assets have been doing in the past and where they're right now in terms of valuations. The stock market's been in one of the biggest rallies in history, or one of the longest, I should say, bull markets in history, one of the largest. Again, I couldn't say when it's going to pop, but they definitely are overvalued. I think we can say objectively that stock market valuations are too high. The bond market, it's had its ups and downs, but the bond market, the U.S. bond market at least, has been in a 30-year bull market, going back to like 1980, somewhere around there. We talk about real estate. Real estate, by many metrics, is also very overvalued, especially when you look at specific markets that have been on fire. A lot of Canadian cities, or the Chinese real estate market, or San Francisco, or Sacramento, or Seattle, or New York. There's not a whole lot of assets that you might call undervalued. And so just from kind of a pragmatic aspect, even if you're not all on board with this whole, what I call a monetary revolution, using silver and gold to be part of a monetary revolution, even if you're not a big part of trying to remove yourself from the system or to avoid fiat currency, from just a pragmatic perspective, silver and gold make sense. They're unbelievably undervalued right now, especially silver when you look at the silver to gold ratio. And so that's a big part of why I believe they will be successful as an investment in the future.
Now, getting back to this, there are so many ways how the economy could collapse. And I know John Rubino is someone who has said this, there are many paths ahead, but all of them seem bad. What is your perspective? Is there any way out of a collapse?
No, I don't think so. That's a simple answer. I've talked about this in the past. There are ways out of our economic future of hyperinflation and whatever else you want to associate with that. There are ways out, but they won't be easy, and I think it's still something we could categorize as a collapse of the economy or a significant crash. Take for example 2008. Okay, when we had the financial crisis in 2008, the government, the central governments of the world and central banks of the world, they had two choices. They could either intervene or they could allow the economy to kind of run its course and the market to sort out things. Obviously, they chose to intervene. We had the massive bailout of AIG and GM and some other corporations here in the United States. Central banks in the Federal Reserve, they printed over $3 trillion over the next 4 years. And so they chose to intervene. But I like to ask myself, what if they hadn't intervened? What if they had let the market sort it out for itself? What if they had let the economy run its course? I think we still would have had a major financial crisis, much larger than what we had. It would have been in shambles. We would have had large banks, a Goldman Sachs or a JP Morgan Chase or something along those lines. We would have seen them collapse. But, despite that, even though we would have had a very deep recession for some time there, I think that would have been beneficial over the long term, right? It would have been just like going through withdrawals for a drug addict. You're going to go through a tough time there, but, and this is an analogy people use all the time. You're going to go through a tough time during withdrawals, but over the long term, you're going to be much healthier. And I think that if they had let it run its course back then, we would have come out much healthier as an economy, as a society. I think a lot of bad debt, a lot of bad corporations, bad practices would have been wiped off the books. People would have lost their jobs, houses, and I'm sympathetic to that. But today, in 2017, we could be seeing economic growth, in line with what we saw back in the post-World War II era here in the United States. 10%, 15% growth, something along those lines. And so, could that happen today? Could that happen the next time the next recession happens? They could let it all fall apart. Yeah, but we'd still end up with an economic collapse or economic crash, whatever you call it. Barring some sort of miracle of science that suddenly vaults us into a higher level of economic growth. If scientists somehow make a breakthrough with something like cold fusion or something like that. No, it's pretty clear where we're heading. I think a big, besides just what I talked about, inflation, the wealth gap and whatnot, I think a big driving force for where the world economy is going forward it's going to have to be China. Back in 2008, during the financial crisis, the Great Recession, what economy was it that brought down the rest of the world economies? It was mostly the U.S. The financial crisis, we dragged the rest of the world economy down with us. I think this next time around, it very well could be that China is the catalyst for a major deflationary period. When I say that I think the end game is inflation, I do kind of go along those lines. I do believe that we're going to have some sort of a crash, a deflationary period first that will that central banks and governments will intervene with things like money printing with low interest rates.
Now, before we let you go, I was interested in getting your perspective on cryptocurrencies. Do you think cryptocurrencies play any role in this at all? Like, do you see them as also a hedge against this economic collapse that's going to happen, a hedge against inflation?
About cryptocurrencies, I think today are in a bubble. And that's not, I think when people hear me say that, I'm not necessarily talking about Bitcoin or Ethereum, that their valuations alone are too high. I think the entire cryptocurrency market is in a bubble in the sense that they're overvalued in comparison to how much use they get, how much utility we get out of them today. And the biggest part, I think, of this overvaluation is that there's just too many. It's not realistic going forward to have 1,000 plus cryptocurrencies vying for this limited market. Eventually it's going to have to be trimmed down. Personally speaking, I am a big fan of the whole idea of if you don't hold it, you don't own it. The idea of physical, tangible wealth through things like precious metals or other commodities as well. But cryptocurrencies, they are revolutionary in the sense that the idea behind blockchain technology and what the changes that they could bring to our society, bring to our economy, it goes beyond just the currencies. It could be revolutionary as electronic banking was or as the internet was. It has a ton of potential. But as far as hedging against this, it's, I'm kind of split on that because I think the valuations today, Bitcoin especially, I think Bitcoin is not going to be the top dog 10 years from now, 5 years from now. But the valuations today, they are not in line with how much cryptocurrencies are actually being used. It's mostly just a speculative play. And people talk about how they're being used as a hedge against, like what you're saying, a hedge against some sort of a economic crash. But I don't think that's the case for 99% of cryptocurrency users. It's a speculative investment, and it's worked exceptionally well for them this year, right? I'm sure many of us have stories of how we kick ourselves for not buying into Bitcoin back at $60 a Bitcoin or Ethereum. I bought some Ethereum earlier this year at like $20, and I sold it slightly higher than that, and today it's 300. It has performed exceptionally well as a speculative investment, but I think it's ahead of its time unless we see widespread adoption of it soon. I would compare it to dot-com stocks back in 2001. The internet and these dot-com stocks, they did eventually become huge. I mean, we have the FANG stocks today, the tech stocks, Amazon, eBay, Facebook, these huge companies that are rightfully so, I think, valued very high. Maybe they're overvalued, but they are worth a lot. Back in 2001, the internet just hadn't come into its own. The technology wasn't there. The infrastructure, the widespread adoption of the internet just was not there. And I think the same goes for cryptocurrencies. I couldn't tell you if we're going to see a crash in them soon. Many have predicted a crash in Bitcoin for some time now. But I do think that they are ahead of their time. Going forward, they are going to be revolutionary. But today in 2017, I do think that they are in a bit of a bubble.
All right. Well, Matt from Silver Fortune, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Yeah, you can find me over on YouTube. I don't have a website or anything as of right now. Over on Silver Fortune, like I said, I cover more than what my YouTube channel name might suggest. I cover more than just precious metals. I talk about the whole gamut of things, politics, geopolitics, the economy, finance in your own personal life. So I'd be more than happy to have you as a subscriber. I'm sure many of what you see here on this channel, you would see over there. So I'm sure Elijah will leave a description, a link below in the description for that. But thanks for listening to this, and thanks for having me on, Elijah.
Definitely. We can definitely do that. We'll put a link to your YouTube channel in the description of the video. And once again, Matt, thank you so much for your time today.
Thanks for having me.